Well, welcome to yet another episode of the Crypto Spin Thrift Podcast. Right into it, just like usual. Bitcoin, the whole market really is recovering. Not very surprising. In later news, you'll figure out why, and just keep holding for now. Bitcoin Cash. I've noticed there's been some arguments and controversy about how to call it. Apparently calling it Bcash can be derogatory, which is hilarious in a way. Anyone who calls it Bcash, I'm not gonna discourage you from keeping on doing that, but just be aware. Honestly, anyone who probably gets upset about it has probably some vested interest in it. And I really wouldn't take them that seriously about them getting booty potted by a small phrase like Bcash. I mean, other coins get a lot more crap in other ways. They can handle people calling the name of a coin something that's not even a person by a nickname like that. Ethereum kind of crashed hard since it was that USD to Ethereum makes it independent of Bitcoin, so it's kind of on its own thing when the market is down, recovering, shooting up crazy amounts. Literally hours ago I was looking at it and it was like 250 something, and 2 hours later it's 270 to 280. It's gonna make a healthy recovery as Bitcoin also goes up. Nothing really to worry about. Figured it was gonna hit that 200 floor, and it hovered around there and went back up. But yeah, I don't think Ethereum's ever gonna be lower than 150 ever again, or 200 is like the soft floor for me, and 150 is like a hard floor of me ever thinking Ethereum's gonna be any lower than that, barring another kind of liquidity margin trading error, accident that makes it $10 randomly. But besides that 1 in a million situation, you can probably expect Ethereum to rebound itself after whatever crashes happen. Litecoin holding its own. Don't know what to say about Litecoin. Underestimated it, I'll admit. Just keep an eye out for it. Our local neighborhood underground dark coin, aka dark web coin, aka Monero, lost about $40-$50ish from the crash, but that one's also recovering now. Really market wide there's recovery, not too much to sweat about it anymore, which is it's good. Alright, into the news. China meltdown, it's continuing. Why? Well, China's really trying to hit down that regulation. Exchanges are closing left and right, and traders are leaving WeChat for Telegram because Telegram won't get them abducted by the Chinese government. So yeah, China just going insane. Not outright banning cryptocurrencies, but they're trying to get the slice of their pots, get a slice of the pie from themselves. So they're kind of squashing out the independent and not legally secure exchanges. China's coming up with legislation and other financial laws probably out the air, and these exchanges were going to go anyway, so don't pay that much attention to China. People who want to trade will find a way to trade still. Onwards to the good news. There's a lot of good news this time around. Wall Street analyst Thomas Lee sees that Bitcoin could surge to 25K. Increasing interest because institution and personal investors will help the price rebound. basically he's saying all these people, all these corporations, basically in the Ethereum Foundation, that's the institutional interest. It's there. Ethereum has that vanguard of institutions who want to be in the cryptocurrency environment. Maybe not necessarily at how it is at the moment, but in the future, or create their own technology utilizing, blockchain. So, because of this, and really the professional investors will come after kind of the big corporations start selling into crypto. It's kind of like segues to the next part with this Jamie Dimon dude vilifying Bitcoin, saying it's a joke basically. But funny enough, JP Morgan was facilitating like the buying of this Bitcoin shares on some kind of fund. It was either they were doing it themselves or on behalf of clients. Not really clear, because the information that's available for the public is not doesn't really state that. But JP Morgan has shown interest in blockchain technology on their own, however. So, this CEO of JP Morgan coming out the gate and basically slandering Bitcoin, slandering crypto. In the long term, it's meaningless, because he's going to be proven wrong, because the LAT token research team, according to them, which is alumni from McKinsey and I'm about to butcher this German word, the Deutsche Bank estimates that the crypto market valuation for 2025 could be up to $5 trillion. Now that, I don't really believe myself. $5 trillion in 8 years, basically. Yeah, 8 years, give or take. Doesn't sound possible. It sounds like a dream. $1 or $2 trillion, I 100% see. I could see $1 trillion in under 5 years, honestly. But yeah, $5 trillion by 2025. I think that's a pie in the sky, but we'll see. CoinDesk has reported that digital assets were 20 times more lucrative than stocks, property, and gold combined. You can basically pair up all these things I just talked about, and really paints the picture for you to where you're not really confused on why this is the case. I mean, this is a growing market for one, and that's probably the most important piece of this proposal. It's a growing market, still very immature. The technology is super new. Not everyone's just starting to even wrap their heads around what it can do. So that's one big thing. Two, since, regulation's coming, but beforehand it was wild west. Anybody could do anything. Good and bad were alive and well, because there's no wall, there's no gatekeepers. So anything could come out of from anyone. It was a pretty much even scale. Three really is, I had it in my head. Well, whatever. I'll just finish this little bit off. Essentially, the whole crypto is, because how new it is and all the potential of it just changing everything. Literally, almost every industry benefits from some kind of blockchain technology. Either it's because the kind of independent confirmations that it can have without being compromised, or the security of the data that it offers in comparison to a lot of alternatives. This is just obvious. But on the other hand, I remember when I was saying it first, the underhanded aspect of how much like the US dollar, a lot of I wouldn't say majority, but at least a quarter of the crypto market is probably funding sketchy means in the dark web. Probably more so drugs than anything else. You know, the occasional terrorism, but mostly probably drugs and laundering money. So that, keep that in mind too, how top side legit cases, there's tons of those, but be aware that there's also less than legal means that are interested in keeping the crypto market afloat for their own benefit. Well, I think that's about that. Anyone who's listening should already know how good crypto is, and just hold. On other news, Chainlink's ICOs in like 2 days. I wonder how that's going to turn out. Since this regulation has been hit, I've been noticing, a lot of ICOs are trying to step up their game at the last minute. We'll see how that fares for them. I'm not really too interested in ICOs themselves, more like what's going to happen to them. Usually, now that it's very obvious that regulation will hit very soon, like under a year, honestly. But I'm just here to watch and report what happens. I'm gonna work on a kind of a general list for what I think is most at risk of getting hit by the feds. And if they get hit by America, you can guarantee they probably get hit somewhere else later, even if they think or appear that they're safe for now. So just be aware that if you're participating in any ICOs, that if they're not super cautious about how they're wording things and how they're going about with their funds, they're really at risk for just losing it all. Or, well, not really at all, but really at risk of being destroyed by some kind of legislation or legal busting when their cryptocurrency is actually a security for a company and not just a token to use. So keep that in mind. A lot of these ICOs are getting it twisted with having their token actually be basically shares, and that's a big no-no. So wrapping this up, Mentality Monday. Don't forget to diversify yourself, kids. Diversify yourself, adults that are older than me. Diversify. Why? Because as you saw, the markets took a major hit. If you're just Maximus and anything, you would have had the biggest hit. Spread yourself a decent amount. Conventional stocks, I believe, is 20 to 25. Like, that's the minimum, or the recommended range, or something like that. Crypto, not really sure. I feel like it's a little bit different. Like, honestly, it seems like it's more like have 50 to 75 in Bitcoin or something, and then have the rest spread out for alts for the variable gains and that they'll get, because Bitcoin's gonna have the most reliable rebound out of anything. It might have a massive dive, but it's gonna have the most reliable rebound that you can 100% say it'll reach that point again someday. But you want to have gains, so that's why the other 50 to quarter of whatever you have is in something else. I mean, you can have Ethereum, but I wouldn't have all of that extra in Ethereum. You're supposed to have something like lower, higher risk, higher reward altcoins that are newer or undervalued in your perception. So this is just generic advice from me, though. Don't take it as like real financial advice. I'm not a financial advisor. I'm just some kid entertaining you with his university age thoughts. Keep that in mind, because that's my legal disclaimer. But I think that about wraps it up. See you Thursday. A lot of things will happen, I'm sure, between now and then, since I think there's a few ICO launches, and I'll report if they're train wrecks, like sometimes they usually are. But yeah, see you Thursday on the next Crypto Spin Thrift podcast. Follow me on all sorts of social media. Go to the website and play around with the links that are on the website. Support me on any platform, which likes and shares, or even toss $1 here and there on the Patreon.